Hello everybody, Jim Malone here, coming to you live from Dallas Trading Floor. It is a Thursday and the market is up today. And the question is, do we have a relief rally? Kind of that's what I'm thinking we're going to have to, that's kind of what I'm thinking is happening here. I do believe it is a sort of a relief rally. By the way, if you're watching on TikTok, I'm simulcasting this on YouTube. Very easy to pick to see all the charts and the graphs. All you have to do is go to my profile, click on click on beacons, and then you'll see a direct link to the feed from YouTube. So let's get into it. Well, I have two things for you today, which is going to be nice. I've got a there we go. I have two stocks that are basically very, very near buy points that I want to show you. And also, I want to show you some of the other stuff as well. Basically, I think we're in a relief rally, and the reason I do is because the overall trend in the market is still in a downward trend. So we have to be kind of cognizant of that. Even though Tesla rallied today, and I want to show you that in just a second, I do believe that this is a relief rally. It's going to be relatively short-lived, so we want to be careful. Now, the one sector of the market, of course, that is doing great and has been doing great for a while, of course, is the oil sector, and we've got to be, we've got to take a look at that oil sector. I've got kind of two, I got some stuff in the oil sector. I did buy. This morning, I did buy BP. It's up just slightly. It's right below the pivot, which, of course, is the buy point. I have two other stocks, Zim and Flex LNG, that are also set up well. You might want to take a look at these. These are right below the buy point. Now, of course, buy points are no guarantee. What I want to tell you about buy points, of course, is that what happens is the stock will move up to a buy point, and then if it moves beyond that, then it probably is going to go higher. So that's kind of the case that we have here with two of the stocks, the Flex LNG Flex LNG and Zim Shipping. So kind of interesting. So let's get into it with the charts first. Let's take a look, of course, at the chart for Tesla. Tesla moved up very strongly today, 4.66% or 11%. Amazing move today. It moved above that 21-day exponential, which is very interesting, very key to the overall health of the stock. Now, would I buy it here? No, and the reason why, and I'll show you this, I'm gonna highlight this line here, reactivate this line. This line here essentially is where the overhead the overhead supply is. What do I mean by that? Well, because people bought above this line, this key line of about 900. This is got to get exhausted. So any rally that we're going to get, we're probably going to get some selling into the. We're probably going to get some selling into these rallies. Why? Because there's a lot of people that want to get out of their positions back here. They bought above 900, and that is a issue for them. So they're probably going to be a lot. But interestingly enough, I definitely think this is a relief rally because we are still in an overall downward trend, but we had some nice action today. And sometimes when you get these downward trends, the best, the strongest rallies are when it is in a downward trend. Basically, the Nasdaq was up about 2.7%. Basically, it's been up about over 2% in the last 3 sessions, last 3 out of 5 sessions. So they're starting to see some movement back into the Nasdaq. Of course, that's where all the growth stocks are. Now, I'm pretty much out of this area of the market. I'm pretty much only in oil, shipping, and natural gas. That's kind of where I'm looking now. But this is something that you have to kind of look at. Now, the Nasdaq made a low on the 20th of May, so that is key. It made a low on the 20th of May. So I do believe that this is a relief rally. Here's what I'm going to do. I'm going to move over to the QQQ, and this is the ETF that covers the that covers the Nasdaq 100, and it definitely was up today, moving really nicely off the 21-day exponential moving average. Now, why am I so interested in this green line, the 21-day exponential moving average? Because it typically will show the overall condition of the market. If you'll notice, 1, 2, 3, 4, we've been 4 days above that 21-day. That almost exactly corresponds with this uptrend. So if the QQQ is living below that 21-day line, we're probably in a decline, and if we move above it, we're probably moving up. So this does look like a relief rally. I think that we're possibly likely to see a rally up to about that 40-day line, and that's right here. Let me just show you that. There we go. It's about that line, and about on the Qs about 326. So if you're in anything like the SQQQ, you definitely want to be closing that, because we're going to rally a little bit here, it looks like. And I do believe this is a relief rally and not an actual real rally. So so that's kind of the deal. All right, I have a question here. Should I buy puts on GME? I would avoid GME altogether, but let's take a look at it, because a lot of people are interested in that, especially in TikTok. GME, of course, that's GameStop. This is one of the weakest areas of the market, and I want to kind of point that out. We're well under the 200-day line, so I could see why you would be interested in possibly buying a put on this. I wouldn't recommend it, though, in this case, because it's been so volatile, and I do believe that it is very likely, it possibly will move lower, but we've got to be, there's just so many factors on this one. So I would be very, very cautious on this one. I think that you probably could make money with a put on GME, but I would not do it based on the way this market is trading. It just doesn't look that good. All right, let's go to some of the buys that I think that we have in this market, and the first one, of course, is a stock called Flex LNG, FLNG. Now, why do I like this one? Well, the reason I like this one is because natural gas has been in short supply in this market, and this is an area that you can participate in it. This is not, they don't operate the LNG, but they transport it. I want to show you the current chart on it. Amazing chart. And if you'll see, it basically moved up very, very strongly today. It pulled all the way back down to that 40-day moving average, and then boom, it just moved right up. Currently trading at about $30. There's a buy point on this one at $32.77. Now, obviously, what do I mean by that buy point? I keep trying to indicate what that is. The buy point is, if it moves above that buy point, that's an optimal place to buy it. But in this market, we're buying a little bit below the buy point. Now, this stock is in the oil and gas transport group. It's 9 out of 197. This is one of the few groups that is doing extremely well. It is my strategy right now to basically overlook many of the tech stocks, because they are basically in, with the exception of today, they are, and today and in the last 2 days, they are in decline. The overall market is in somewhat of a decline. So we have to basically look at the market in such a way that we are going to see, we want to move to where the strength is. The first one I want to show you, of course, is Flex LNG, and this one has an interesting opportunity here. There's a buy point right at $32.77. So this one is actionable right now, and that is Flex LNG. So this is one you might want to take a look at. Also, in addition to that, we have another one. It is Zim Shipping, and this is a bulk carrier, and this one is starting to set up as well. If you've been watching me for any amount of time, you'll know that we've talked about this stock a lot. The reason I'm so interested in this stock, of course, is because it moved past this reversal line here, and I'm drawing this reversal line. You can see this, by the way, on the feed that I'm doing not on TikTok, but on YouTube. And at the end of the show, if you want to see any of these things, just go to my YouTube channel, Dallas Trading Floor, youtube.com/Dallas Trading Floor, and you can see all what I'm talking about here. All right, this is Zim Shipping, and it moved right above this very, very nice reversal. It had a nice reversal on it. It's the buy point on this one, 75.71. We're currently at 66.71. So this is definitely actionable, I believe, in this market. I think, what do I mean by actionable? Well, what I mean by actionable is that you could start creating a position in this stock. And here's the markup for the live chart. As you can see, this is the reversal line here. We've moved above that, so I definitely think you could start building a position here, as we did have some excellent earnings, and also they had a special dividend. So Zim Shipping is extremely strong, and at least in this market, I think we could see it move at least $10 more a share in the next few months. So this one might be a good way to start. If you're not in the market right now, if you're in cash, I was mostly in cash. This is one you want to take a look at, because I do think it really might make sense. All right, well, let's go with a few more things here before we get to the questions, and that is, I want to show you the current situation of my portfolio. Not a very big portfolio, I'll tell you. I only am holding 4 items right now. I have, of course, Chevron. That's been one of my biggest holdings, and that's down a little bit today, but just 32 cents, but it seems to be holding well. Also, I've been in Flex LNG for a while. It was up $2.16. I bought in a little bit lower as it touched basically the 21-day exponential. I typically like to trade off of that bounce on the 21-day exponential. So that was a very nice pop that we got on Flex LNG. Of course, that's the one I still think is viable, is Flex LNG. I'm also in essentially a bond fund. Now, this one has been just kind of going alongside. This is sort of more of a safety play. It's only off 1 cent, basically. This is the TBT, the ProShares Ultra 20-year plus. Now, what do you mean by this? As interest rates go up, this typically will increase in value as well. But it depends a lot on the Fed, and it's quite political. But I do think that this one is good. Now, I did get a fill yesterday on BP. I think of the larger companies, this one is set up very well. I want to show you the chart on it here just in a second. Okay, here we go. Here's the chart on it. We're still below the buy point. The buy point on BP, this is another one that you could probably add to your list, is basically 34.16. That's a place where you want to, that's why if you want to come into the stock, that's where you can start coming into the stock. Now, I typically buy them as they're reversing up into that buy point. So I did buy some shares today at 32.70. We're a little bit up, 32.83. So that's what I did. I put what they call a buy stop limit order in on that. Oh, I think we got issues with. Well, let's just remove that. Okay. So I think we had to jump out of we had to jump out of LinkedIn. Didn't like us. didn't for some reason we got an error there. But so we broadcast on a number of platforms. Of course, we broadcast on TikTok. We broadcast on YouTube, LinkedIn, Facebook when we can get it, and also on Twitch. So we got a lot of platforms there. All right. Okay. Oil will not go further. Just saying, buying long puts. Well, you know what? That's a good question. I'm taking this from TikTok. I'm going to start basically with the questions, and what that basically means is that with oil, that basically saying that everything has been priced into it. I'm not so sure that's correct. I'm looking at this relative strength line here on my chart, and it's looking pretty darn good. It's got a 98. Now, can it go higher? Well, it did pull back a little bit today. You don't think it could go higher, but I think if we get over $100 a barrel over $100 a barrel oil for any amount of time, then it's going to be probably, the oil sector is going to probably remain an area that people are going to invest in. Now, it does look like the Saudis may open up the taps, and I definitely understand that. Of course, they want to protect their market share. They're worried that if the prices stay high, of course, that many of the shale drillers in West Texas and other places like that will start opening up the taps, and that might get rid of some of their market share. But it does look like they're going to open up the taps. Now, I still think that oil will remain high. And my main thesis on that is that oil is what is driving this inflationary bent. Now, I know that everybody is talking out of both sides of the mouth. They're saying that it was the stimulus, which it was to a great extent. But what it really is, I believe, is the fact that we did not manage, this country did not manage our oil very well. We've got oil that came off the market. The Russian oil came off the market. We curtailed the Keystone Pipeline, and that's all it took to move oil up. And everything in the economy, at least in terms of inflation, is based on the price of oil. And I know that sounds a very ire. I mean, we've been trying to replace oil since the Jimmy Carter administration, but it has not been successful. So here's one thing I want to say about the oil business. I do believe, at least for right now, we're going to see some strength in this area, probably for at least another year or so. So I'm not so sure that the XOP is not a bad investment. I think it's a good way to scoop up some of that profit that's going to, some of the profit that's going to come into the XOP. So XOP is a symbol. So I definitely believe that. All right, let's take another question from TikTok. Would you want to buy puts on oil ETFs? I don't think you would. I don't think it's a good idea to be buying puts. Now, I possibly look at buying calls on oil, but I still think that the oil has a ways to go. I don't think that it's ended its innocence move by any stretch of the imagination. But then, you know, there you go. What is one stock you think is definitely going to crash? Good question. Boy, I would have to say probably something probably something that has a very high valuation relative to its peers, and I still think that there's ones you know that definitely could crash. I mean, Teladoc is down. There's a lot of them that are down. So, but I don't really have a good symbol for you on that one. So let's go to the let's go to the people on YouTube. Thank you for holding, everybody. Appreciate it. Do you see Starbucks? Okay, did Starbucks? Let's take a look at Starbucks. Okay, because that's really a consumer. SBUX, of course, is the symbol for Starbucks. You know what? I think this stock may be shortable. I know that sounds very counterintuitive here, but I'm looking at this, and I'm seeing this downward trend. Okay, that's what I'm looking at. And when I'm looking at the chart, I'm like, oh, that's a downward trend there. It's got a relative strength of 25. That means 75% of the market is doing better. And right now, if you look at the S&P 500, this is the S&P 500. S&P 500 is moving up a little bit, and this is moving up a little bit. But I think if these converge, if these go against each other, I think that you could see some resistance right here at this line. More than likely, I think in the next few days, I think you're going to see people selling Starbucks. Would I short it at this level? Well, I don't like to short anything in a downward trend, and I don't like to short anything in a uptrending market. Currently, the market direction is we're in a confirmed uptrend. So. Not a good time to be shorting things until it moves to a market correction. I only like to initiate shorts when the market is in correction. So right now, I wouldn't be initiating any new. I wouldn't be initiating anything right now because even though I do believe this is going lower, we're in an upward trending market. So I just probably wouldn't do anything here. I just probably would leave it be. That's probably what I would do. Okay, Amazon split. Okay, well, as you know, Amazon is going to be splitting. And the question is, can it be bought, and would you want to buy it? Well, we are in a confirmed uptrend. It's starting, and Amazon is starting to move. Amazon is starting to move in the right direction. It's moved above the 21-day line, and it's looking like it's moving up to the 40-day line, which is a very good sign. It was up today about 1%. Up today 13% and up 1% in after hours. So typically, the best time to buy anything that's going to split is right before it splits, right before the date of record. Now, I believe the date of record for the split is the 30th. I'm not sure. The 30th. So at least in the near-term future, looks like in the volume, there's probably some truth to the fact that this one might be buyable. That might be buyable. Let's take a look at it. I'm not currently in it. This is at the very bottom, retail internet. This is at the very bottom of the pile here in terms of its position. So I'm not particularly excited about that. It does look like it's making a rally. I don't know if if it's going to rally to the $2,600. I'd be a little bit careful about this one. I do think, though, you can make a short-term play right before the right before the split. So that's what I think you could do. I probably would not be a buyer of this long-term, though. I just don't like it, unfortunately. Can you talk a little bit more about the Amazon split? Well, I wish I knew more than I do, but let's take a look. I believe the Amazon split. Let me see if I can get the exact time and date of the Amazon. Let me see if I can get the exact time and date of the Amazon split here for you. Let's look that up and see if we can get that. So Amazon split. There we go. All right. So the Amazon split is basically slated for Friday. This Friday. Now, June 6th. So what basically happens right before a split? And this is actually following. This is actually following the. This is actually following the prescribed the prescribed trend. Typically, a stock will trade up until the day of the split, and then after the split, it will split. People will sell off their shares, and it will trade down. So you might get a short-term 1 or 2 day play. Here's what I would do on this one. I'm not in this one, but here's what I would do if I was working on the Amazon split here, is that I would, you could buy it, but I would sell it the day that it is the date of the record. So it begins trading on the 6th as a split on the 6th. And let's see, today is the 2nd. So I think you could probably trade it. I mean, if I did it, you could probably buy it tomorrow and sell it on the 5th, or and sell it on the 5th. That's probably what I would do. Here's the problem with this: when it splits 20-for-1, you're going to see they're going to see the shares pull back a little bit. So that's one thing you've got to be very, very careful about. If you buy it if you were to buy, say, 5 shares, and it were to be split to, say, 100 shares, you're likely to see it after the 6th move down a little bit, at least initially. So, but the way a split works typically is that it will trade up until the day of record, which is the 6th, and then after that it will trade down, and then it will regather steam and then move up again typically. But there are some headwinds here. One of them, of course, is the fact that that Amazon is the fact is that the market is pulled back. We're in a relief rally, but we haven't bottomed in the market. So there's a fair amount of risk that you would be taking if you did if you did do that. So I would be a little bit careful about that. I would be a little bit careful about doing that. But you definitely could buy it tomorrow, wait until the 6th, sell it before it splits, and I think that might work pretty well. All right, let's look at for Matt. Let's look at TECK. This is also sort of a stock that that is in the oil and gas space. It's more of a services company. It's called well, I'm sorry. It's in the mining space. Tech Resources, copper, gold, the whole kind of thing. And it definitely is looking pretty good. It was up a little bit after ours. I don't know very much about this company, to be honest with you, but it is right below a buy point. So that is very, very strong. And the fact of the matter is the buy point on this one is 44.93, and we're just right below that. So the question is it buyable here? Well, it's got a pretty strong checklist, I have to say, 89%. The technicals look good on it too. We are a little bit extended. We're about 6% above that 10-day line. So it's likely here that it's going to take the 10-day line a little bit of time to catch up. So if you did buy it here, do expect it to pull back, potentially pull back a little bit. But I don't see any reason why you couldn't buy it at this level. This is a good chart. And if you want to be in the miners, now I'm currently not in the miners, but if you want to be in the miners, this one might look pretty good. So interesting stock, and thanks for bringing that up. Appreciate it. Could you explain a little bit more about a relief rally and how the market can get affected? Absolutely, I sure can. Here's the thing with a relief rally. What happens in a relief rally? Well, stocks don't go all the way down. So what I'm going to do is I'm going to flip on over to a chart here that is the for the Nasdaq, because I think that's probably going to give us the best illustration of this. So let me just pull this Nasdaq chart up here. Right. This is going to be this is the Nasdaq composite. This is the entire Nasdaq. This is all of the shares that are on that. So here's the way the Nasdaq looks, and as you can see by looking at this chart, the current direction of the Nasdaq is downward trending, right? Okay, so we sort of hit our high here, which was back here in November, and that absolutely correlates with my portfolio, unfortunately. It's been hard. We've basically entered this bear market in November. And you can see that's right about here, and that definitely correlates to my portfolio. That's definitely for sure. That's sort of when it started not working as well. Okay, so we've definitely entered the bear market in November, and you notice the downward trend. Now, there have been instances when it's kind of bounced up. That's what we're in now. We're in sort of this is called a relief rally. For instance, there was a relief rally in January, from about January to the first week of February. You can see it moved up, right? All right, so that's a relief rally. The second thing is happening here. This relief rally is started here, and who knows where it's going to go, but this is going to sort of be the action on it. So I anticipate it moving up to very close to this line here, which of course is the 40-day moving average. So that's what a relief rally is. Nothing goes down in a straight line. It goes down, and then it rallies, and then it goes down, and then it rallies. The overall trend of the market currently is down, but we are in one of these relief rallies. So that's kind of how I'm looking at the market. All right. Question from G. Let's look at Apple and see kind of what's going on with Apple. Okay. Get my chart going here. And there's Apple. All right. With Apple, it is also, remember, Apple was one of the most valuable stocks on the Nasdaq. So if the Nasdaq is in a relief rally, you could be assured that Apple will be in a relief rally too, because it is one of the largest components of the Nasdaq. So definitely have a little bit of a relief rally. Now, where do I think this is going? Well, I do think that we could possibly see it move. We could possibly see it rally up to possibly the 200-day line. But here's the problem with Apple right now. it's trading like many of the other stocks in this area below that 200-day line. We do have the 40-day line, which is moving down and looking like it's getting ready to cross it. Now, it hasn't done that, so I expect at least in the next few, the 40-day line to kind of move like that, kind of move up a little bit. But one of the things that we have to be watching about the market in general is that the 200-day line is starting to flatten out. And when that happens, up until now, really, for just years and years, the 200-day line has been basically in an upward trend. You see this is an upward trend. Now it's starting to flatten out. If it holds here, that's good, but if it starts to move down, we're going to start to see a continuation of the bear market. So my opinion here is that right now this is a little bit of a relief rally, and we could see, we could see Apple move up. But I do think that there's a lot of overhead supply right here. I think a lot of people bought higher than this, and then when it starts to rally up to here, they're going to be wanting to sell. So if I was not in Apple right now, I would be not looking to be putting in a full position here. So that's kind of my take on it. It'll probably dump tomorrow after the job report. Yes, I think you're right. Well, here's the thing. We're in this relief rally, and Apple is one of the biggest components of the Nasdaq. So as Apple goes, so goes the Nasdaq, or as the Nasdaq goes, so goes Apple. That's kind of how you would look at it. Right now, at least in the short term, of course, it's been trending up. But I do kind of expect, based on this chart, to see some headwinds. So I would not be building a position in Apple right now. There's just too much overhead supply. And I just don't think it's going to be likely to be a winner. That's it. Now let's check in. I want to check in on sort of the other big stock in the Nasdaq, and of course that's Microsoft, Msft, and that one is also showing this rallying action, but it's been down. You can see this one's been down. This also has the death cross on it. We're starting to see the 200-day moving average starting to turn downwards. When that happens, of course, that means that capital is flowing out of the issue. Now, Microsoft doesn't have nearly as much overhead supply as it doesn't have nearly as much overhead supply as Apple does, but it still has a significant amount of overhead supply. So I do think that any upward motion on Microsoft is likely to create selling from people that have bought it when it was much higher. So again, I'm still not that bullish on the Nasdaq stocks and that sector of the market. I just am not, based on the fact that there's so much overhead supply. All right, let's see if we can take another question from TikTok. Thank you very, very much. Do you ever take a question? Absolutely, I take them all the time. I'm trying to find a question to take right now from TikTok. Why do you want to buy puts on oil Ddfs? Right, exactly. You don't want to, by the way, everybody out there, and I just want to make this clear, I don't think it's wise, and again, I don't know everything, obviously, but I don't think it's wise to be buying puts on oil ETFs. A put indicates that oil is probably going to go down in value. Unfortunately, I don't think it's going to go down in value, at least not in the near-term future. The major oil companies are making record profits, and they will continue to make record profits as long as as long as there are constraints on the oil business. So right now, I think the time is not to be short the oil sector, it's to be long the oil sector. So I could see a case for buying calls on like the XLE, but I don't think that you want to be buying puts on it. Just my opinion. All right, let's take a quick question here. I'm scared to look like it here. Yeah, I agree with you, boy. I tell you, it's getting the market in general. Yeah, I think that market likely is going to be. Oh, hey, good question from Joka. Thank you very much. Is EA? Are you now? If you're looking to put puts on BA, British Airlines, Boeing. That might be a good case. Now, by the way, I did have a short. Let me show you this chart, my chart on Boeing. Now, I had been shorting Boeing But I closed my short back here on the 25th of May, and we did a nice profit. We shorted here, and then we closed here. So I almost got it right on the bottom, which is really nice. We're seeing Boeing rally again. I do believe that it is very likely that when the market condition churns here, we're likely to see this move down. So this is potentially a good short. Would I short it here? I would probably wait a little bit, but it is an upward trend, and I do think that it might be potentially a really good short. Let's look at the 15-minute chart to see. Yeah, so we definitely have some buying action that came in here, but Boeing is a potential short. Of course, it is one of the Dow stocks. Now, I'm much more comfortable shorting Dow stocks than the other ones, primarily because of their size. So this one might work again. I do think that Boeing is likely to go lower. They have some serious problems, unfortunately, in the company. So not a bad look. All right, let's look at AMD, and that is. Let's take a look at AMD. All right, AMD, again, similar to a lot of other charts. We did have the death cross back here. This is where the 40-day line crosses below the 200-day line. This shows weakness. We've been weak, and now we're in a relief rally. The relative strength is 77. Would I be interested in buying this here? Gosh, you know, I just don't like being buying in this area right now. The only reason I like AMD as a company, I think it's a wonderful company, but I just don't think this is the time to buy it. Why? Because the semiconductor fabless area is 167 out of 197, which means this is in the bottom 20% of the market. Money based on this, and I'm looking also at the 200-day line, it's not flowing into this issue that much right now, based on this 200-day moving average. So right now the capital is moving out of this issue, so I would be a little bit careful. In this relief rally, you can do well, but I wouldn't want to buy it long here. I think it's a potential short, but I wouldn't short it right now. Why? Because currently the market is in a upward trend, believe it or not. All right, we're just about done here. And for everybody out there that hasn't become a member of the Action Trade Alerts, I do go through these very, very fast, and I'm going to try to give more information on the list. Just go to www.DallasTradingFloor to get on the list. First and last name and an email address, and we'll get you set up for that. All right, let's take the last question for TikTok. Should I buy puts on GME? I wouldn't touch GME. Okay, okay, Jim. Will gold down? Very good question. This is a great question, by the way. This is from Colin Byrne. Thank you very much. Will gold go down to 1830 and bounce again, or pop? You know what? I know this is counterintuitive, but let's take a look at the ETF GLD. And the question is, you know, with all this inflation, why in the heck is gold going down? Right? You would think, because everybody tells you gold is the greatest inflation hedge. Well, I'm here to tell you that is not the case. The best inflation hedge, believe it or not, is oil. Why? Because it's used in everything. So, in a period of inflation, you want to gravitate towards oil. Gold is a wonderful thing, especially if you're giving it as a gift to your significant other, your wife, your girlfriend. Gold is a wonderful thing. But gold, unfortunately, has really no intrinsic value, whereas oil does. And that makes oil the best inflation hedge. So just FYI. Here's the thing with gold shares, and this is the gold shares ETF. This is sort of usually how I play gold. We actually have this weird thing going on. Even though we have, quote unquote, all this inflation going on, the value of the dollar against other currencies right now is rising. Isn't that weird? Why is it rising? Well, the reason it's rising is because around the world, many people have dollar-denominated debt. Okay, so they need to pay back in dollars. So if they can't get dollars, they have to bid the price of dollars up. Now, the dollar is overvalued right now in the market, but that makes holding dollars actually during a period of inflation actually a good investment. As a matter of fact, dollars have been one of the better performing assets in the market. So it's very, very strange, but I do expect until gold moves above about $2,000 an ounce, I think that there's a lot of downward pressure on gold. I think that anytime gold starts to move up, you're going to start to see central banks selling it like Russia. Why? Because they need those dollars to pay back their debts, and those debts are in dollars. So they really have two choices. They could either sell oil, and of course, with the situation with Russia, Russia does not have, Russia has tons of oil, but they can't sell it because of the embargo, so they have to sell gold. So that's one thing I do see holding down the price of gold, is that a lot of central banks are using it as a hedge. And unfortunately, if you are counting on gold, now gold obviously is not going to go to zero, so over the long term you're going to do well with gold, but right now it's not the same kind of inflation that we had in the 1970s, I don't believe. I believe that because there's so much external debt that's grown, so many people owe money in dollars. Getting dollars is key. So the countries that can sell oil and get dollars to pay back their loans, they're going to be doing well. So I'm just making a word salad here, but basically to sort of net it out, I don't think that gold, unless it moves above about 2,000, it's not likely to move higher. As a matter of fact, I think in the near-term future, at least towards the end of the year, we're going to see the value of gold actually go down. And I know that's very, very strange, but that's definitely what I believe. All right, so thank you very much. Let's take one more question. I think we're right at about 45 minutes. So let's take a look at Boyle. That'll be a last chart today. And let's take a look at Boyle. And Boyle is the natural gas. And I do this is an area I do like. I do like natural gas. I'm in F and LNG. There is a shortage of natural gas, and here's the thing. One of the great things about buying natural gas at this point is that for all the noise about electric cars, and they're a great thing. I made a lot of money in Tesla. I'm not in it currently. The electricity in this country, primarily, at least in the United States, is generated with natural gas. So the demands for natural gas typically go up in the summer for air conditioning reasons, but I believe they're going to go up all year round because of electric cars. So this is an area that I think that is very, very worth your while looking into. Now, Boyle, which is the ProShares Ultra natural gas, it's a 2x on the price of natural gas, is looking pretty good. Is it viable at this level? Well, you know, it seems like the last intermediate high was here at about 97. So it's relatively speculative, but I think that if it reverses off the 21-day line, that's where to buy it. And currently, the 21-day line is, let's look at those technical charts. It's at 106.02. So here's what I would say. I would put in a limit order if you're interested in trading this one, and I do think it's likely to trend higher. It's going to pull back, and I think it's going to move above that 21-day line. So here's what I would do if I were trading natural gas here, is that I would wait for it to pull back to the 21-day line, which I currently have at 106.02, and then I would buy it there, and I think you're going to get a nice little pop on this, because I do think that, at least from what I'm seeing, natural gas is definitely moving higher. All right, well, I think we have one more. Well, let's see, we have one more question. Thank you very much. Hey, thank you. Thank you, everybody. Thanks for watching. I so appreciate it. Please tell your friends about the show, because it's my goal here to help people. To help people make more money in the stock market and hopefully cut through some of the stuff. Now, am I always right? Absolutely not. But here's the thing. We are in a downward trend overall, but we're in a relief rally. I know that sounds really contradictory. So here's what we want to do. We want to, if we're going to go long, which I do recommend, we want to be in the areas of the market that are the strongest. Right now, the strongest area of the market is oil and natural gas and things related to it. Shipping is also very, very strong. So we want to concentrate our treasure hunt there. On the other side of the market, we're still waiting to see, what the bottom of the market is going to be. I do believe very strongly that we've got a long way to go down. So I think the Nasdaq likely, even though it's rallying right now, is likely to go lower. Now, eventually, we're going to get to the point where everyone is totally disgusted with the market, and everybody is saying, I'm never going to put another nickel in the market, and then we're going to get a follow-through day, and then we're going to start buying. But right now, it's still really up in the air. So be very, very careful. I would try to keep a fair amount of cash, at least 50% of my portfolio in cash, because there will be opportunities. And thank you so much, everybody, for taking a look at the show. By the way, if you haven't already, smash the like button. Boy, I would really appreciate that. Really helps me out. That really out. So please smash that like button out there, so I get out there to more people. By the way, if you're not already on the Action Trade Alert, it's very easy to do. Just go to www.Dallas Trading Floor. Well, until tomorrow at 5 o'clock on Friday, happy trading, everybody. I hope everyone is well, and I hope everyone is doing good. Remember, if you're down more than 7% on any stock, please close that position and wait for a better opportunity. The whole game right now is capital preservation. So I'll be back tomorrow at 5. Happy trading.